crypto yields have always had a bad connotation with, programs that have Celsius, Anchor, and others that have gone completely collapsed. But this guest today, Tarun Gupta, who's the CEO of Coinshift, is bringing something completely different to the industry when it comes to treasury management and even accounting measures in the crypto space. We talk about all the protocols building and where he resides in Dubai. We go over a little bit of regulation, and more importantly, we saddle in and we talk about stablecoins, especially the yield-bearing stablecoins that they're building on top of Paxos's stablecoin platform. This is such an interesting episode that covers everything in stablecoins, how companies are making money just by having crypto on their books. This is a really great episode for anyone building in fintech, payment, or crypto. Probably should go listen to the full thing ASAP. This is your host, Stephen Sargent. This is the Around the Coin podcast. We have Tarun Gupta from the CEO of Coinshift. Tarun, tell the people a little bit about yourself, and then we're going to jump into your background. You're going to talk all about your stable coin. It's going to be an exciting conversation.
For sure. Thanks for having me. I'm pretty excited to be here. So I'm founder and CEO of Coinshift. Got into the space around 2017 as more of helping people running their Bitcoin exchanges in India in terms of helping them as running Bitcoin RPC nodes, right? And at that time, Bitcoin scaling was the only thing. So I got into Bitcoin Lightning Network and built like a library to help Lightning developers to build on top of it. And then after like some time, I was with my friend, like trying to figure out, okay, what this space needs. A lot of people were losing their mnemonic phrases, just 12 word to 24 word mnemonic phrases. And we thought of like a social key recovery protocol where you have trusted devices or guardians where you can recover in case of loss. So it was like, never lose your Bitcoin. And if you lose, like you can recover through some cryptography based algorithm. So yeah, but it was too ahead of the market. We were talking like multi-chain recovery solution. And at that time, multi-chain was too ahead of the market and nobody was interested in funding this. So we decided to open source this. And fast forward to 2019, I joined Bioeconomy through a common connection with Sandeep from Polygon. So yeah, that's how I got my sort of first job in crypto, like efficient job in crypto as a infrastructure engineer. Led the team with the CTO to build like a gasless infrastructure for the end users. And what happened in Bioeconomy is basically we used to get paid in crypto. And every single month, basically, I sometimes need to go back to your CEO and say, like, pay us on time or he forgets to pay on time. And it was like little weird as well. And the accounting was happening on WhatsApp or Slack. Right? And it was very, very weird. Like the entire flow was weird and nobody was actually thinking to make it like very simple. So what I decided to participate in a hackathon, build like a simple solution where you can just pay to multiple people in a single click directly through your treasury and you can tag the transaction and do some basic bookkeeping. Very simple idea, not like crazy social key recovery protocol or cryptography. But everyone just suddenly got interested in this and Protocol Labs and Consensus sort of put us like a PC check together. And I was like, as an engineer, okay, I've been trying like really hardcore technical stuff from the last 4 or 5 years, but nothing is like was able to raise venture capital, right? And this like very simple solution, I built it like in 2 3 days only, and then it was like very exciting to see. And we were able to convert Uniswap grants, Balancer grants, compound grants, and a couple of like synthetic grants. All these grants program of large DAOs almost in the first month of the launch. So yeah, I think that is like a brief journey, and then I'll talk more from there. But yeah, that's this
That's
very
interesting.
exciting
You
times.
talked about Lightning Network, and that caught my attention because I remember when like Lightning Network was going to disrupt the industry. It was all going to be about Lightning Network, and then it slowly started to fade away. Can you talk about a little bit about that?
Yeah, I think at that time we were having this thought process as an ecosystem. Bitcoin is money, right? And a media of exchange, people will live on top of Bitcoin. And slowly, when the time will come, and a lot of people will hold Bitcoin and the fluctuations will not be very volatile. So Bitcoin was like more of a money use case. People were exploring this. But at the same time, the transactions were slow, right? The block times were 10 minutes, I think. It's still 10 minutes. Bitcoin will never change that. So yeah, I think overall Lightning Network was an idea to really scale this money use case so that you can just have Lightning channels. And based on that, you can just say, okay, for micro payments, I can set up a channel with you. And for all these micro payments, we will settle in a separate ledger, which is a layer two network. And then,
Right.
the entire proofing system is on the Bitcoin layer one. So the concept was really good and then exciting. And at that time, Ethereum was also planning its scaling and then other solutions. So it was like a scaling time, right? We want to scale money use case. There were no like real growth of stable coins at that time. And but why it fades away, it's to be honest, is like the the role of all these blockchains were very different. And the asset issued by all these blockchains is not only like Bitcoin is not a money as such. Yes, you can argue
Right.
that, but for everyday person is more of a store of value. But rather than
Right.
exchange it on your coffee shop, you will not exchange it because the value can change. So that is not real. I would always argue this thing is, if only gold exists and there is no fiat money, then yes, Bitcoin is a better money than gold. I understand that, right? That makes sense. But is it like a better money right now with the fiat, which is like fully liquid as compared to everyone accepts it? So that's how the normal user is thinking, right? They're not using Bitcoin for normal transactions, and that's why like the stable coins is the biggest product market fit of crypto, because it solves very simple use case, which is money, and that is a a real dollar representation on the blockchain.
Right. And the
So yeah,
microtransactions just feel a little different. I think it's like a conceptual thing. It's hard to picture like you have $100,000 worth of a Bitcoin and like you're taking a small fraction of that versus sending exactly $300 to an outsourced person doing business with you halfway around the. You know what I mean? It doesn't feel
yeah,
the same. I think people are attracted. Society is attracted to that large value, and to take small slivers off of it doesn't make as much sense as like something like sending stable coins for the exact amount you need.
yeah, exactly. And then we have learned as a society as well how to operate on fiat for a very
Right.
long time now, right? So yeah,
You're based in Dubai, which has quickly become like probably the epicenter for like crypto, AI. I don't know if they're still talking about the metaverse in Dubai. I think that conversation may have slowed just a little bit. Talk to me about some of the projects you're seeing. Like, what's it like being in a jurisdiction that constantly has people coming from all over the world, collaborating at conferences? There's never a dull moment. I've been there a few times, and there was literally an event every other day. You could just live by the conference center there. Talk to me about, what your thoughts are on, building in Dubai.
yeah. I think Dubai is a place right now where like 95% or over more like are expats, right? Like not the local population here. So people around the world are attracted to Dubai because of like couple of reasons. First of all, it is connected everywhere very easily. The infrastructure is like really world class, and for me, for example, it's like a 3 hour flight to my home. It's like my another home very very close to my native home, right? But for crypto specifically, I see the government has taken like huge steps here. So, for example, Abu Dhabi government, recently regulated basically the Paxos stablecoin, which we will talk about later. But imagine as a company, your government is up with you to work on like traditional instruments to put it on the blockchain. And there are like, their government is also innovating, and as a company, you are innovating and you're building something together, right? And it is fully supervised by the government, and it's pretty exciting to see. And yeah, I think, and even with Dubai government now, I think having this licenses to issue a stable coin under VARA regulation, and maybe Tether is going to issue its first stable coin here, right? So yeah, it's pretty exciting. And then local events and all every day, as you were saying, there are like hundreds of Telegram groups so you can join, and every day some event is happening. Almost in Marina downtown area, like a lot of other crypto founders are there. Almost everyone I know has like lives here. So all the Indian founders also live here, and a couple of large companies also live. The founders of that live here, so, and pretty near to each other, right? So it's just a hub, and very very attractive.
That's amazing. When we look at your background, it's I like to use the word textured, if you will. You've been in engineering, now you're doing, finance and basic accounting and reporting, user experience. Like, where does your mind go? Like, what does Tarun stand for? And like, what are you fixated on right now, like specifically?
Yeah, I think I always believe, right? I'm an engineer and believes in like maths, and then I was like teaching maths for like 3 years since my in my college. So I really love maths, cryptography, and all from very early days of my journey, right? And that's why social key recovery protocol was built. But then what I realized is like, okay, you can think very technical stuff and mathematical equations and all that and get excited about it. But if you can build something real and the end user uses it, that high is very, very like great and satisfactory for me as a founder, right? So yeah, what I learned is like try to make things very simple for the end user and hide all the underlying complexity. But at the same time, when somebody wants to verify it, you have all the details, right? So I think this has been my mantra. You can say like, how do you simplify the most complex things for the end user, and at the same time, while learning crypto and then blockchain, you understand finance much better and easier because you can try it out. You can send the payments like very easily. You understand, okay, I'm not going to pay a percentage fee whether I'm sending $1 million or $100,000. The cash fees will be same, right? So you just start understanding all these sort of primitives, and then I started learning about traditional finance almost from last year, you can say. So first I got excited about crypto finance and then started learning like traditional finance. And now it feels more easy to learn traditional finance because you understand crypto much more
Interesting.
technically better.
And do you see there's an area to play here, especially with so many traditional financiers coming into the crypto space? We see companies like Ondo Finance,
Yeah.
tokenized treasury bills. There's like this, obviously Trump and a lot of the big players in the US, BlackRock, Fidelity are getting into it. Where do you see yourself? Are you more on the crypto side? Are you helping traditional transition into crypto by providing them, the treasury management system? Where do you feel you sit, or explain the most common use case you have for Coinshift?
Yeah, for sure. So from the last 3 years, what is our business, right? Our business have been like more into treasury management for on-chain organizations. So you come up with your multi-sig treasury, bring your entire back office team here, and you will be able to do all kind of expense management with your crypto assets, right? And at the same time, you are able to do financial reporting, basic bookkeeping and accounting, you can say, and you download the CSV so that you can put it into QuickBooks, etc., for financial statements, right? So this has been our bread and butter, and we have over billion plus in AUM from organizations including Aave, Bitcoin, Starknet, UMA, like 300 plus clients, right, from the last 3 years. And almost we are touching $1.2 billion in payouts volume, right? So Coinshift has been used as an alternative to fiat bank when it comes to on-chain treasury management, right? And from there, I think we understood like the user base. So like one insight, very simple insight is like all crypto companies are also Web2 companies as well because they are registered entities and they all use bank as well at the same time. It's not like you're a crypto company will not use bank, right? So the same
Right.
company is using a bank account and the same company is using Coinshift, and you
Right.
learn a lot what has been going in both the worlds, right? So if you are in US, you must have heard about Brex or Mercury as a neobank, right? And what they do for startups or Web2 organizations, you can just do payments, expense management, card management, right? And do automate your accounting, but you can buy a T-bill in just 2 clicks, or automatically they ask you to invest certain part of your treasury assets into T-bills. And they have just built it on the entire traditional rails, right? On top of current banking infrastructure. And we were able to draw very similar parallels to Brex or Mercury or Revolut and in blockchain as well. So we were thinking, okay, what is our next big move in treasury management so that they the organizations who are holding money on chain, they should also start earning yield, right? Similar to what they are doing with Brex or Mercury. So that's how we decided, okay, let's launch like a stable coin which will work, which will give you the T-bill yield on a daily basis in a permissionless manner, right? So imagine you are holding CSUSDL, which is our stable coin, which we launched on almost the first version was live in November, but the latest version is like on 7th Jan. And what is like by holding CSUSDL, you're just getting T-bill yield daily, your balances increase. and through your
Interesting.
crypto wallet, right? You don't need to go through KYC, KYB. It's a permissionless way of presenting the T-bill interest rate on a blockchain.
And how
And
does that
then,
different from somebody's trying to stake? Like, so let's just say I'm holding, somebody's holding $1 million worth of USDC or USDT on their banks. How come can they stake that? Would that be against the rules? Is that too complex now? Is there a risk to staking versus what you're doing, which is like, hey, you have the funds here, you're going to get a yield on it for just keeping it with Coinshift, is what I'm assuming.
yeah, I think let's dig a little bit deep, right? So there are like 50 plus stable coins right now, and USDC, USDT are the major ones, right? And end of the day, USDC is solving like a money use case for the end user. So by just holding USDC, you can move money in and out very easily. But under the hood, USDC is very highly liquid, and some part of their treasury reserves are in short-term treasury bills and couple of other cash equivalents, which is sort of the revenue for Circuit, right? And
Right.
for Tether, they have diversified their treasury in a lot of other reserves, basically. But the end user is just holding USDC or USDT. They're not earning any yield, right? But
Yeah.
that is like, okay, that is fine. They have solved like the major use case. What we are solving is like the yield use case, where your money should be earning a risk-free rate at any given time, right? What banks are earning or what USDC is earning at a similar rate in a permissionless manner. And that's why we work with Paxos, the largest, like the third largest stablecoin issuer after STC, right? And they work with PayPal, etc. So they launched their stablecoin USDN, which gives you the treasury bills yield through a rebasing mechanisms like STETH or like Lido's STETH, for example. So what is happening is you have USDL, it is increasing in number of USDL every single day.
Right.
The
The yield.
right. So yeah. So but you cannot use that directly in DeFi. So you need to have a wrapped version of that. And
Right.
yeah, and then we are taking that wrapped version and putting into a lending protocol so that you can just earn more interest rate through lending it out to Coinbase, BTC holders or Lido's STETH holders, because those are also blue chip assets, right? So for the end user, the differentiation is you can permissionlessly mint CSUSDL, get the T-bill yield and the lending yield almost block by block basis, right? So, and you don't need to stake, lock. You can just go to CowSwap and have your USDC and mint CSUSDL in like a single swap. You don't need
And
to do any additional lockup.
right. And that doesn't seem like a huge deal, but when you're dealing with companies that have $1 million on their bank or 1%, 1.5% starts to make it, that's an employee almost a month if they're able to pay out that amount.
Exactly.
I
And
have a quick question. You see
yeah.
a lot of this stuff. Who are companies paying the most? Like, who's getting the most? Is it the legal counsel? Is it the sales and marketing person? Is it the devs? Who are companies paying out the most to?
Yeah, so technically, like it's a very secure, like it's a very private data for the companies, right? And then we are like in compliance for not sharing any details, you can say.
Right.
But obviously, the major ones is like salaries and salaries or uses service providers, vendor payments for sure. And
Interesting.
yeah, because a lot of the legal, I would say, like I think after this Trump administration, they will start accepting USDC as the payment because they don't have. Think about a vendor, right? If they don't have set up the proper compliance from accepting the crypto payment, they will not accept it. So
Right.
generally, like the use case is salaries and grants, right? Because the other person is sitting in some other jurisdiction and the banking rails cannot reach there, so you accept money in USDC, right? So the major chunk is salary.
What the you just launched an accounting tool, a subledger, which combines a little bit of payments, a little bit of accounting in it. What would led to that decision to launch? Usually you have one thing, you're focused on it, treasury management, we do well. What, prompted you to be like, hey, let's get a full dashboard here and get into the accounting side as well?
Yeah, I think we are like very clear. We are not building a accounting solution. Still, crypto organizations do accounting on QuickBooks or Zero or other accounting sort of Web2 solutions because you need to combine your fiat and crypto treasury, right? What we wanted to do is like automate their ledger data. So think about right now, your QuickBooks cannot calculate the cost basis of your Ethereum when you sold it, when you bought it, what is your tax look like for that? You cannot do that through QuickBooks, right? So you need like a data engine and indexer in a very technical sort of infrastructure side so that you can produce this data so that it can be digestible by your accounting software. So when we say about like accounting or our bookkeeping, it is just categorizing your transactions, right? In a way, it is digestible by your Web2 software, right? So we are not an accounting solution as such, right? So yeah, I think we were very clear. Like we want to be the bricks or Mercury for blockchain rather than like
Right.
an accounting solution.
Which makes a lot of sense, right? If you can give them the information that their
Yeah,
accountant needs to
exactly.
process on the Web 2 side, and we're seeing a lot of demand. The IRS has come out with new rules and
Yeah,
requirements. They're losing a lot of money on people not
yeah.
reporting crypto in the US. Where are you making CSUSDL available?
Yeah, so CSUSDL is fully permissionless, right? End of the day, you can mint it without Coinshift permission. You don't need to talk to us. We don't control the CSUSDL token ourselves, right? So by just with USDC, you are interacting with like a Morpho protocol, which is like a lending protocol, right? And it is totally immutable. So Morpho team also does not control that. But it's a very permissionless system. But end of the day, yes, we need to be compliant in terms of how Paxos compliance is. So USDL, our underlying collateral, you can say, is not available for US citizens and a couple of other jurisdictions wherever the yield is not regulated. So that's why we are not offering CSUSDL from our side to any retail or normal consumers. We just offer it to institutions and
Right.
liquid funds or market makers, or they have offshore entities, etc. Right, and from there they can easily mint as much as, and it is fully legal there.
Makes sense. The word yield, when like you say the word yield, it makes so much sense now, but I felt like there was a time, maybe about 2.5, 3 years, where the word yield like was very synonymous with scam or
Yes,
right?
yes,
Celsius, Anchor. Like I think we
parallel.
know a lot of those protocols where yield had a bad connotation.
Yeah.
Do you feel that word has finally rebranded and it means what it's supposed to mean as we've kind of like filtered out all these bad actors that were offering like 40% yield, year over year, APR? Like, where do you feel the word yield? When you say yield in a conversation, has it changed much from 2021 to when you use the word now?
Yeah, I think overall the sentiment because of stable coins, right? So think about right now where the yield is coming. This is like a
Right.
meme, right? Where actually the yield is coming. So if your stable coin is just backed by your own token, right, with some algorithm under the hood, it is a very difficult, pegging mechanism, right? You are as good as your underlying token. But if it's a stable coin like USDC or like a real backed by real reserve, which is over collateralized and really liquid assets, right? Then everyone understands, okay, this is a solid stable coin. And if you are doing lending on top of it, there are actual real borrowers who are borrowing this asset. So just like in TradFi, if there are lender and borrowers, you have an interest rate as a spread rate. So now the yield is coming actually through lending. It's not basically just some random, altcoin is giving the tokens only, and that is the real yield. So that's why the industry has learned to call native yield and rewards. Last time it was all like rewards which were called yield. Right?
Yield, right?
So,
Whatever they
so
could, whatever word got people to want to, make 20% off their money for doing nothing. Whatever word they could, they probably used all the words doing A/B testing, and then they just like, hey, yield's getting the most traction. Let's just use that word.
yeah, exactly. But now everyone like is far more learned than us, and we're still learning as an industry. To be honest, a lot of scams are still there. So I'll not say it's very difficult to detect that in crypto. So definitely need to do the diligence a
Right.
lot, right? Yeah.
You touched a little bit about the US market. The US has come out with some stablecoin regulation proposals. They got the Stable Act, they got the Genius Act. Like, questions going around with like Elon launch his own stablecoin. Like, there's a lot going on in the US around stablecoin legislation. What are your thoughts, just high level thoughts about like the progress at least you're seeing in the US and how hopeful that might be for CSUSDL in the future?
Yes. I will talk about like only the regulation first because CSUSDL has still like backed by USDL. So USDL needs to be regulated there for us
Right.
to get regulated there, right? Because they are end of the day we're a derivative on top of USDL. So for 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 US, I think it is very, very great news because the government is giving a lot of clarity for payment stable coins, right? So they clearly see to really have the dominance of US dollars, these payment stable coins needs to get issued with the proper licensing, right? And the more dollars will be issued as a stable coin by fintechs and players like PayPal, imagine other banks also issue it. It will dominate the power of US dollars end of the day, right? And dollar as right now as well, very dominant. So blockchain is just increasing its efficiency, right? It's a new technical architecture for the US dollars, in short, how I see this. So definitely they are giving a lot of clarity, the clarity around the reserve requirements, where your reserves should be held. You cannot just invest, the underlying reserves into a private credit or some random shit, reserves, right? You can only have like T-bills, short-term T-bills or cash equivalents and bank deposits. And so they want like a full oversight and there is a fine if you don't comply to that. And what
Right.
does it mean for the industry is because the regulation is clear, the player like Stripe and other fintechs, right? Why they will work with only banking infrastructure? They can directly work with stable coins and they can just make their services much more appealing and better for the end user across the globe, right? So I think the more regulation, the more right regulation comes, the more sophisticated entrepreneurs and fintech applications will integrate these stable coins and the more users will have equal access to these stable coins. So I'm very, very positive on that side. But right now, the yield use case, for example, like USDL, USDM, Ondo, these are not regulated out of US in terms of like as a yield bearing stable coin, right?
Right.
So yeah,
Yeah, it's always tough because they're building basically what the U.S. infrastructure needs. They just can't act in the U.S. as of right now, but it seems like we're getting progress. You
yeah,
talked about, the reserve requirements. What are your thoughts about what's happening in the EU? Like MiCA seems to have very strict requirements,
yes,
almost turning stable coins more into like a traditional financial product, which it
yeah, yeah.
already is alike, but maybe stifling some of that cross-border innovation and ingenuity that, most countries rely on stablecoins for. Do you think they've gone too, constrictive, or do you think there's room, for innovation still in the EU?
Yeah, I think it'll become very. The way I see this is like countries have the power to make their fiat, right, issued currency as a dominant currency in the world because of blockchain, right? Just like internet currency is, e-money is like, circulated very, very fast, right? So, so I think it's up to end of the day. Obviously, current regulations are very strict in terms of having these kind of requirements, and even the reserves you need to keep some 3% of that and in liquid form, and there are I think more requirements on the caps as well, how much you can transfer. But still, I think Circle got like a license for their Euro stablecoin in out of France, I think. And and yeah, I think overall, like these kind of regulations will restrict like new entrepreneurs to easily launch like stablecoin there, right? But at the same time, like more sophisticated players like Circle can have more dominance. Any which ways, I feel still it is some good step what's
Right.
going on in traditional finance because end of the day, it is issued on blockchain, right? And at the same time, for somebody is not transacting large volumes of money, it is still better to accept and pay in stable coins in euro, right? So I just feel like yeah, it's like a mix and match of centralization and decentralization, where centralization is more stronger than decentralization. But
Right.
the way I see this, it will become more competitive, and if they become more stricter, more entrepreneurs will go offshore as well.
And and to
Right.
your point, like stablecoin issuers, there's some that are very like centralized focused, which it seems
Yeah.
like Circle is, versus some more decentralized trader focused like Tether. So it's going to appeal to different types of stablecoin
Stable
issuers
coins.
and how they approach, their business
Yes.
model.
Yes.
I'm curious, we had William Quigley. We just recorded an episode. He's the co-founder at the time of Tether and the Wax blockchain, by the way. I'm curious. He made a point that, all these large international global companies are probably going to start launching their own stablecoins. We already saw that with PayPal. Stripe, obviously, the strategic acquisition of Bridge. What are your thoughts? Do you think like more global companies around the world, like the Nikes of the world, the Red Bulls of the world, they're going to, start transacting just to settle across border? They're getting hit with heavy FX charges. Do you think they'll start moving into more having a stablecoin option, or will they piggyback off of like already built infrastructure, whether it's BVNK, Paxos, or even yourselves?
Yeah, I think I truly believe in this. Like launching a stablecoin will be a commodity, but running a stablecoin is not going to be the same, right? So yeah, you can launch it. There are like a lot of infrastructure providers, right? And even the large banks can do it themselves. But it's not about launching a stablecoin. It's about the distribution and liquidity from the counterparty as well, right? So and it is not that straightforward. And even like Paxos is the largest stablecoin issuer, it still takes a lot of time to build the liquidity, right? Their total market cap is less than $2 billion, if you see, right? So it's even with the PayPal, their market cap is less than $1 billion right now. So it's not about okay, the big institution is coming up and launching their own stable coin and they will get the liquidity very fast. So so I think the main thing is like the big question for all these institutions are whether you want to get into like the router. For example, like you can use a couple of stable coins between the routing of moving money in and out, but nobody holds it, right? So if you want to off ramp, there is a stable coin which works with the government properly. You can just hold it for the time when you want to move out from the funds, right? So yes, you can act as like the settlement kind of stable coin, but the real business is like people will hold that right, like USDC, USDT, and that is
Right.
actually a real currency. And for that, it is very, very difficult, to get the network effects and all that. So that's why we are not competing with the money use case at all. We don't want to go there. I think there will be like huge competition. What we really want to go for is like the yield use case in the lowest risk possible, right? So can you have the similar risk profile what USDC is doing under the hood and what MakerDAO is doing under the hood, or and then can you offer like a very low risk yield, like a risk free yield to the end user and without having any additional staking locking? So it's like a new concept we want to introduce on the yield side, not on the money use case.
From a complete entrepreneurial standpoint, do you feel like you're at the mercy of Paxos? Like, what is that when you're built on top? And this goes for anyone building on top of a native blockchain or, an application that's building. How do you feel about like, hey, a lot of what you're doing is going to rely on what happens under the hood, as you say, with Paxos and their stablecoin infrastructure? Is that a
Yeah.
bottleneck for you? Is that a huge risk factor for you? Or is that something that you're like, hey, we're just happy to be building on Paxos because, they're taking their time and doing it properly?
Yeah, so honestly, it's been like more complementary what we are doing with Paxos, right? We are more into the DeFi native side, and they're more on the compliance and infrastructure, working with like really government. It is a very difficult work, in my opinion, and at the same time, you have like a huge team to work with the government who can talk to the government in their language, right? So it's been like super complementary, and our incentives are aligned. So for every USDL held in CSUSDL, we make like a minting fees out of that. So the incentive structure is pretty aligned, right? And the end user is getting the maximum benefit rather than Paxos and us. So I think the entire architecture what Paxos is doing with their USDL is like beautiful. Obviously, these are challenges. They are like a large institution themselves, right? These are challenges. We are not like that big right now. So yeah, I think overall, but it's been a pleasure to work with the team, and I think we can grow CSUSDL a lot, and then USDL outgrows by default, right? And currently, the USDL TVL is 50 million, and CSUSDL has 34 million out of that. So we are
Right. So you're
major like
building, you're
distributor
the,
of.
you're the core. They're more worried about losing you. you're a core driver. Who's the company? Like, take us back, still on this entrepreneurial track. You're in business, you're trying to land clients. Who was the company or protocol where you're like, oh, I think we have something here? Like, what was that moment when you're like, oh, we finally landed that whale, and then because you had them, it was able to, build up that demand of people that wanted to work with you after they saw that you're working with certain companies?
I think what played like a huge reputation for us is our B2B business,
Mm.
because we had all the major institutions like our Bitcoin and all these like big organizations use us on a daily basis almost, right? So we have like a huge respect, and then our backing is from Tiger Global, Sequoia, and a couple of large investors within the Web3 space. So that trust also breeds like more trust. And then when we launched our stablecoin with Paxos and Steakhouse Financials, Steakhouse Financials is like the founder there, man, like almost started the $2 billion RWA program in MakerDAO, for example, right? And they work with Lido, ENS, and other large. So all these players are like pretty big in themselves, which brings trust to us. And when they say yes to us, it like, gives me a lot of confidence as an entrepreneur to really bet on this, vision, because it's very hard to convince, large institutions to, and recently we announced our partnership with GSR, for example, or Amber Group. They are one of the largest market makers. They put like some money in CSUSDL on their balance sheet, right? So it's like a beautiful validation as an entrepreneur, right? Okay, you can convince such a large institution, go through their diligence process,
Right.
and trust me, it's very big diligence process. So to go through that and then convince them as a user, right? Yeah,
And it's all a trust game, right? This is all like,
yeah,
do we trust you with our money and you're
yeah,
not going to collapse or
yeah,
run off with it? Or there's a back door for the founders to escape to Bali
yeah.
for the rest of their life, right? I'm curious, how much are you using? Obviously, AI, blockchain, everyone's using it in the same sentence. How much are you using AI? Is there queries you think you can make AI chatbots to help people maybe ask some, accounting questions of like, hey, should I sell my NFT right now? And would that, result in the gain? What are your thoughts on where you could possibly use AI in the future or where you're using it now?
Yeah, I think in the platform we are still very strict on adding any new feature, because they are coming up with like very large money of using, like, Coinshift, it's like billion plus in AUM, right? And some of the organizations have like $100 million in treasury assets. So trust is like everything for us. Obviously, we can make like a chatbot that is not very hard to build that. But we are very, very critical, like what kind of features we want to build within the app. And I don't see a really big use case, especially for us right now, because anything can be automated using like normal accounting rules. But yeah, I think for tax heuristics and knowledge base, I think in the documentation, I'm very interested to create like a chatbot where
Right.
somebody is asking, okay, how does it work, or help, on the support side. So definitely AI is useful. But I'm a big fan of AI. Like I am using AI left, right, and center, you can
Yeah.
say, in my
What's
life.
what is the
So
application you think you use the most? Or do you use it to help you code? Where do you use it the most?
yeah, I use Claude for coding. I use GPT, the $200 model for deep research. I use XAI a bit sometimes on Twitter research. I use, yeah, I think these are the major ones. But my favorite one is Claude so far.
Interesting. Treasury management is never going to be sexy like meme coins, right? Like,
Yes.
so, and it's similar to what your point about Lightning Network is like functionally, utility wise, it made sense. We even had William talking about Wax blockchain and delegated proof of like, it makes sense. The utility is there, but it's almost like the industry is not looking for utility. They're like, forward thinking to speculation. How do you see or look upon the future of treasury management and accounting in Web3? Do you need a rebrand to make it like more sexy, or you're like, hey, we're not trying to be sexy, we're trying to be accurate and diligent, and that's where we're gonna sit. We don't need to be popular, we need to be trusted.
No, it's a beautiful way to think about it. I think we want to be sexy for institutions. How about this? Right. So, and and for retail and all, I think as a brand, we are doing a lot of work, and then our definitely our TGs on the horizon for the stable coin. So there will be definitely, they can, if they want, they can speculate on the upside of the company like you do in stocks, right? But at the same time, we are very stringent. We are very, very strict in terms of focusing on institutions and B2B and really large treasuries. And for them, I think we are very sexy. So yeah, I think as long as the risk management is institutional grade, we know we are doing the right thing. And end of the day, any retail can utilize our products and use it, but we don't actively promote and want to go there. It's like sometimes it's a bloodbath to be honest in
Right.
crypto, to listen to much noise. Yeah.
And there's a lot of accounting type softwares. It feels like everyone's doing a little bit of difference. You know,
Yeah.
there's TaxBit, there's Bitwave, there's, you know, our friends at Trust Finance. Where
Yeah.
do you feel like, you know, people are coming to you maybe versus the other
Yeah.
competitors for certain things? Where do people are like, oh, we come to Coinshift for this?
Yeah, I think they are like generally like crypto accounting, full subledgers, which is like acting agnostic to the chain, right? So
Right.
you can put your any address and they'll be doing the accounting for everything, and they're much more advanced softwares, to be honest, than us. We are focusing at like a Brex or Mercury use case where you are
Right.
doing the payments from your bank account, right? Can you just tag it on the spot and you know who pays what, right? So when you're going to an accounting solution like let's say Trust Finance or Bitway or even TaxBit, you don't know the context of the transaction. The context of the transaction always stays where the payment has been done, right? And
Right.
there are no merchant codes like in TradFi you have in crypto. So where are those merchant codes? That sits on Coinshift, if you see, right, as a knowledge.
Right.
So we are a payment system which helps you track and which helps you sort of manage your categories and tags and all that. We're not like going super deep into the accounting, to be
Accounting
honest.
side. Awesome. Are you using any blockchain analytics tools? I'm assuming if funds are coming in or funds going out, are you using any tools to make sure that, you know, an address that they're sending to isn't like a North Korean hacker that, integrated within their system, or they're paying somebody that they should be in a country, that's, sanctioned? How do you manage, your own compliance, especially on behalf of so many high ranking users?
Yeah, it's a great question, and definitely there are a lot of security audits we do under the hood for our users, and all these hackers, as you know, right? They're like unique ways they find out how to hack your systems. As you know, the recent Bybit hack as well, right? The same backend was compromised. So definitely, it's very difficult to really make sure, right, you're secure. So we have like a security team who has like worked with banking and banks in India, right, for a very long time. So the way we really want to think about this protection is, first of all, we are a gated system. You cannot just like B2B
Mhm.
platform. You need to apply for the access first, and we verify the person who is using this, right? And it's an approval process from our side, and we kept it initially to cut down the noise and bots from the system, right? And on B2B, so it's a cost for us, right? So yeah, I think we pretty much know all of our customers as a customer relationship, and we really protect in terms of like our infrastructure security, whether like how the developer pushes the code on prod and all these things, like a constant check on us.
Awesome. What is, you talked about, being very specific on what features you want to add and not spending too much time on things that aren't going to add value to your institutional customers. What is on the roadmap for Coinshift? Is there anything you're interested in? Partnerships you're looking to align yourself? Any tea that you can give us on what Coinshift's up to, especially going into Q2?
Yeah, I think our major milestone right now is to grow that stablecoin to $100 million and TVN. Once it grows to $100 million, our B2B clients have $200 million plus worth of USDC sitting idle right now, right? And we want to offer CSUSDL there in that entire B2B solution, so that those treasuries should not be sitting idle, right? They can make like a risk-free rate, as I was mentioning. And then you want to get into other stablecoin reserves, because we are a very safe collateral. So go CSUSDL with that stablecoin, you can borrow USDC up to 96%. It's a very safe collateral to use at any given time while earning the entire yield, right? So you come up with your $10 million, for example, and you can borrow 90% of that in USDC while still earning the entire interest rate on $10 million, right?
Right.
So,
Interesting.
so
And what would
yeah.
people be borrowing against? Like, is there any scenarios that people would be borrowing against that, $10 million? Is it like to, are they using it in their business operationally because they're still making a yield on the
Yeah,
full amount anyway?
yeah. The cost of capital in crypto is very high. For example, let's say you are a market maker or an institution, and you are coming up with, let's say, 10 million, and you want to put in CSUSDL, but like, okay, I can borrow the USDC at 10% rate, and I know with this USDC I can make more interest rate outside, right? So you are earning both the yields and you're canceling out almost the borrow rate. So it's up to the end user. We want to make CSUSDL very liquid asset so that they are very confident they can liquidate it very, very easily, right? Either through the borrow side, because 96.5% is almost like, very less risky, right? In terms of you can just get your entire money back if you see.
Right.
So yeah, that is like our unique value proposition.
I love it. You said the types of AI products you were using. What are some of the other maybe nerdy things, especially when you get into like software developers and engineers? There's some things that they're doing on the weekend that end up being the things that everyone does in real life, and AI probably being one of those examples. Is there anything that people are doing that you're like, oh, this is a little new, and I don't think a lot of people have caught on, but you can see it catching on in the future?
Yeah, for me, I think I always love to see like unique patterns on how basically you can combine TradFi and DeFi, right? And recently, like Ondo Finance is launching their own L1, and at the same time, Athena is working with Securitize to launch their Converge on chain, like the settlement layer for TradFi assets. So yeah, I'm just like these days, I'm just learning how to combine these two worlds, and I'm using definitely deep research a lot by ChatGPT, like their largest plan, like $200 one, to really learn the TradFi, right? And maybe some interesting primitives we can also build for CSUSDL. Yeah.
Interesting. What do you think's keeping some of the TradFi people, even up to today, with Bitcoin spot ETFs being approved, and Ether approvals or Solana, and XRP submissions? We have so much happening in the US and other regions around the world. What do you think the reason that some TradFi institutions are still kind of on the sidelines and like don't want to dabble in DeFi, Web3, or even crypto?
Yeah, I think it's always like, they are also competing with their peers, right? So they don't care like whether the crypto market is going up or not. There will be few players who will take the risk first, and BlackRock is one, right? They have been they tokenized Buell like long time back, and now it crossed like $1.2 billion. So for other asset managers, it's like a really big alarm, right? Like why they are not doing the same, right? And that's how you see from all other large asset managers like Fidelity and all, they have been super active, and they must be thinking like to launch like even 10 instruments on chain, right? Who knows? So in my opinion, competition is super important, and then once we get the few right players into blockchain, everyone else will come. Like we are humans end of the day, and then everyone wants to be number one, and but there will be only a few players who will be number one, right? So it's like a race end of the day, and then similar on a country level. That's how I see it. If Mica goes more stricter, people will find solutions in other countries, right?
Right.
So yeah, the world is competitive.
I love it. I love it. Tarun, thank you so much for joining Around the Coin. Where's the best place for people to find you? Is it Twitter? Are you on LinkedIn very often?
Twitter, Tarun
Twitter.
Gupta 1475.
Awesome. We're going to include the link in the show notes. Thank you so much for joining Around the Coin today. It's so interesting about treasury management. People don't think about it, but it's really what keeping this industry running. Otherwise, once a year, the accountants would be pulling out their hair and nobody would be getting into crypto.
Yep.
Awesome. Thank you so much.